Right now, we're moving towards 20 million Bitcoin having been minted since the beginning of its existence in 2009. The number that it will be in existence ever is 21 million. So only 1 million more to go, which is about $100 billion. So scarcity value is becoming more important, especially since for the first time, Bitcoin supply growth dropped below the long-term supply growth of gold, which is 1%. The supply growth now is roughly 0.9%, and that will continue to go down with time. Scarcity value will drive or will increase because of the supply-demand imbalance, with institutional investors really having very little involvement yet. And so we think this is just the beginning.
With only 1 million Bitcoin left to mint and institutional demand rising, the setup for a massive price breakout is already in motion. That's the message from Cathie Wood, CEO of ArkInvest. After months of sideways action, momentum is building, and the next phase of the crypto cycle is underway. Cathie's conviction hasn't wavered. Her fund continues to add aggressively, confident that digital assets will lead this year's tech-driven rebound. With supply tightening and capital rotation accelerating, Cathie believes explosive growth is just ahead. And this time, the move will be sharper, faster, and impossible to ignore. Make sure to stick around until the end of the video as Cathie Wood breaks down where she sees Bitcoin heading next and why she believes the biggest moves are still to come.
I'm half and half crypto, and just to give you a sense, half and half crypto and equities, hardly any bonds. So given that I think crypto is going to stun the world, at least the way I've positioned in certainly Bitcoin, the biggest. And in the case of Bitcoin, right now we're moving towards 20 million Bitcoin having been minted since the beginning of its existence in 2009. The number that it will be in existence ever is 21 million. So only 1 million more to go, which is about $100 billion. So scarcity value is becoming more important, especially since for the first time, Bitcoin supply growth dropped below the long-term supply growth of gold, which is 1%. With the latest halving last year, the supply growth now is roughly 0.9%, and that will continue to go down with time, which is unlike gold. If the gold price keeps going up, that supply growth will pick up in its pace. That cannot happen with Bitcoin. The second reason is institutional investment. Now, Bitcoin it represents three things. It's a technology, so the blockchain underlying Bitcoin, which is a layer that the internet missed out on in the early 90s because developers had no idea financial services would take place on the internet. So now that is now being put in place. It is becoming a substitute for gold in terms of a store of value. Younger people prefer Bitcoin than gold. And I think they do believe that it is basically the same thing. Both of their prices are determined by scarcity value. And it is a new asset class. It does not behave like other asset classes. Sometimes it behaves like the NASDAQ. Sometimes it doesn't. Sometimes during the regional bank crisis in the U.S. in early 23, it boomed because everybody understood no counterparty risk here like the banks had back then. So it doesn't behave like any other asset. And that means that institutions and asset allocators have a duty to assess whether it deserves a role in the portfolios or their asset allocation. And if they say no, they better have some very good reasons. So the $100 billion that I mentioned, institutions have to either take up those newly minted Bitcoin, and that's going to happen over years and years, or they'll have to pay up to get holders to sell it. So again, scarcity value will drive or will increase because of the supply-demand imbalance, with institutional investors really having very little involvement yet. And so we think this is just the beginning. If you look at Bitcoin over time, the volatility was incredible in the early days, 200, 300%. It has been coming down consistently, 40, 50% now. And if you believe in the scarcity value of Bitcoin, just like gold has had ups and downs, you're going to be willing to put up with the volatility. But it's the sort of asset where you put it in your portfolios and then just leave it there. I mean, there's going to be trading around it, and that's great for the exchanges. You know, we're involved with Coinbase. That's great for exchanges. But for individuals and institutions, it's a buy and hold asset because it is in such early stages. And really think about that. Institutions probably have trillions commit to digital assets broadly, and Bitcoin only has 100 billion more that will ever be minted.
Cathie Wood outlines 3 key forces driving Bitcoin's rise. First, it's becoming the preferred store of value for younger investors. Younger investors are choosing Bitcoin over gold because both are scarce, but Bitcoin's supply is fixed and programmed to shrink over time. With only 1 million coins left to mint and supply growth now below gold's 1%, scarcity is taking on real market weight. Second, institutional demand is building. Bitcoin acts as a store of value, a tech layer, and a distinct asset class. It doesn't move like stocks or bonds, and in times of stress, like the 2023 banking crisis, it held strong. That resilience is forcing asset managers to reconsider its place in their portfolios. Third, the supply-demand gap is widening. With just $100 billion in future supply left, institutions will either absorb it slowly or pay more to convince holders to sell. Scarcity is colliding with capital, and Cathie believes this is still early. The setup for long-term price appreciation is already in motion.
Personally, I have bought Bitcoin outright. Many of our clients wouldn't let us put it in the portfolios, so others are playing it through Coinbase. Robinhood is developing a crypto strategy as well. SoFi is developing a crypto strategy. eToro here in Europe just went public, and we added it to our portfolios. It has a crypto strategy. Many are forced to go in directly just because their platforms. I'm thinking about advisors now. I realize you're DTC, so your clients can buy it outright. The last thing that I'd like to add is there is a way to kind of straddle the two, and that, of course, is ETFs. So spot Bitcoin ETFs were approved. The SEC approved them last year. ARKB was one of them. That's ours. And so that is sort of a way to leg into pure play Bitcoin exposure instead of dealing with a wallet provider. Through the lens of innovation, I have never been more bullish. And one of the reasons for that is if you look at the financial markets really over the last 4 to 5 years, and the equity market in particular has performed in a very narrow way. Very few stocks delivered the bulk of the performance. In fact, if you look at the Mag 6 over the last 5 years, they're up 5-fold, while truly disruptive innovation, not saying that they do not innovate, but truly disruptive innovation is up only 30% if we look at that segment of the market. We think those places are going to switch going forward. So very, very bullish. Well, there are three of them there: robotics, energy storage, and AI. Three major innovation platforms. Each one has its own S-curve, and now they're intersecting. One is feeding the other in the form of autonomous taxi platforms. We think that's an $8 to $10 trillion opportunity globally in the next 5 to 10 years. Mm-hmm. So exponential growth all the way. We have in our Big Ideas 2025 forecasts for both of those, as you say. So which one do we believe will get there first? I have to say Tesla, hesitantly though, because the distance between here, say $330 and $2,600, is less than the distance between 104,000 and 1.5 million. But our confidence in both is very high. Just want to emphasize that. This is a bit of a deja vu moment in my own career. This period reminds me of the early days of Reaganomics in the early 80s. And Reagan was cutting taxes, deregulating, and focusing on getting interest rates down. Trump is getting tax rates down in more ways than Reagan did, in that he's trying to get tariffs down. So if you look at the 80s and 90s, those were the golden age for equities. I think we could be entering into another period like that. Our strategy is volatile, more volatile than the market. And that's because these are long duration strategies. So they do get hit harder during turmoil. But the ironic thing is when consumers and businesses are afraid or concerned, worried about the future, they're more willing to change the way they're doing things. So better, cheaper, faster, more productive, more efficient, more creative products and services. That's what we do. So what you usually see towards the end of a correction or a bear market is our stocks tend to start outperforming before the broader market does. And that has happened in this time as well. We went through tariff turmoil. We went down more than the market, and now we're up more than the market. And the question now is, will this be sustained? If we're right that we're moving from a rolling recession to a strong recovery with surprisingly low inflation because it's going to be productivity driven, I think we're in for very good days.
Cathie Wood believes more capital is now flowing into crypto, and institutional investors are pushing prices higher. She expects massive gains over the next 3 months and sees this momentum as proof of Bitcoin's lasting role as both an asset and a hedge against currency debasement. With crypto legislation advancing in the House and global interest accelerating, Wood is urging her portfolio companies to invest aggressively while growth potential remains high. She estimates ARK's tech-focused strategy targets a $7 to $8 trillion opportunity, still under 10% of global equities. As emerging markets adopt digital currencies, she believes decentralized finance is on track to replace most traditional financial services. Do you agree with her analysis? Share your thoughts in the comments. Anyway, guys, before we go, if you want to stay most up-to-date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.